Hello, everyone. Welcome to the Community Advocate Network. You have connected with the Credit Master Class. As promised, we have our special guest, credit consultant, and former Detroiter, Tanya Dunnigan. Welcome, Tanya. Welcome, welcome, welcome.
Thank you, Deborah. Hey, everybody. It's certainly a pleasure to be here this afternoon or this evening. I am very excited to give you some information that is going to help you understand your credit and how it works. And the one thing that I want you to remember is that if there's any questions after this, you are more than welcome to reach out to me and let me answer some questions for you. Let me help you get your credit score up. If you want to reach me, you can contact me at 404-528-9884. Call me, text me, it's fine. And you can email me at restoringthecredit.com. So, one of the
Yeah,
things
actually, what I'm going to probably do is go ahead and I'm going to post all of her contact information. If you guys look on the page while she's in her presentation, we're going to take questions. We have a couple folks in here. I see. We're going to take. She's going to take questions rather as her presentation ends. At the end of the presentation, that's how you're going to do it.
Yeah, I mean, we can do it that way. But so if you got a pen and paper as you're listening to me, things may come to mind, write them down so we can go ahead and try to address those for you while we're here live today.
Yeah. So, okay. So, I want to, before she gets started, I want to make sure that you guys are able to or remember to check out our website at www.canmichigan.com. It should be scrolling on your screen. That is a wealth of information in terms of community resources, programs, services, government benefits, rather. Um, Especially for those that live in Michigan, it is not only for Michigan residents. Some information that I share are available in multiple states and some in all 50 states. However, give it a check if you're looking for housing, especially my counselors and case managers and all you folks who service the public doing human services. It would be a great resource for you, and just anybody who needs help with anything. Again, like I said, housing, food, medical, health insurance, not health insurance, but health, um, free health care, free to low cost prescriptions, and things like that, particularly for low income households. So there's a lot of I've also added a section for our returning citizens reentry programs, helping those with felony histories get their records cleared, get programs that are helping them or assisting them with getting social service benefits and things like that, housing, employment, and as well for our ex-offenders. So, but so much more information is there, that so much more resources are there that will help anyone who's in need. And I want you guys to give us a thumbs up and share the video. Also, I have listed under the previous event from last Saturday. If you look to the right of your screen, there's a section called events. And that is, if you click on that, you will see the post from our originally scheduled broadcast from last Saturday. Um, and I have a list of recommended readings. I did not provide anything with specific financial tips. However, I did recommend some books that I have read over the years. And all of the experts say we need to deal with our mindset about money before we can start to build wealth and things like that. So I think that these books will be good. Some of them are classics. You will be familiar with them. Seven Habits of Highly Effective People, As a Man Thinketh. All of those books are pretty well known. You can click those links and purchase any or all of them to support this channel. And again, give us a thumbs up and share the video while we're live, and that will help us out a great deal. So Tanya, I want you to go ahead and take it over. You're ready to talk to the people?
I'm all set. And, before I start, I definitely want to give you the highest praises for all the great information that you provide on your website. I mean, it is just absolutely phenomenal. It is just wonderful how you take the time to get the information that people just don't realize that it's really needed, and it's all in one place. So people, please share her information, and also make sure you sign up for her newsletter so that you can continue to get this information. You can share it. I mean, the thing about us being able to help people is all about word. It's all about you spreading it and communicating with other people to let them know it's out there. So please make sure that you support Ms. Deborah Mitchell and all that she's doing, because she is definitely giving the people the information that they need. And I, again, thank you and appreciate you for allowing me to come and share my expertise.
I am so honored to have you here. And I'll say this briefly. Tanya and I go way back.
Yes,
we were talking over the weekend and didn't realize we've been running buddies for about 30 years now.
Absolutely. And, absolutely.
Yeah, we miss her.
And no matter what, we can always catch up, and it's never like we've missed a day.
Oh yeah, yeah, exactly. But we miss you here in Detroit, and our little lunch dates and all of that stuff. But hey, listen, everybody. I'm also jealous that you're out there in that nice warm climate.
Yeah, it's beautiful today. It's like about 85 today. It's been I could turn my air on so that I could get comfortable, because when I walked in the house, it was like, whoo, okay. I love Atlanta, but it will get hot quick on you. But anyway, yeah. I'm going to go ahead and get started. I don't want to hold people up. I know it's close to dinner time, but this information, I hope you're ready. You got pen and paper, and let's get started. First of all, the cost of bad credit is totally something that will cost you a lot of money over the years. So please, if you have not taken your credit seriously, you have not pulled and looked at your credit scores, you need to do that, because bad credit costs a lot of money. The interest that you pay on loans, what you go through in terms of high costs on a lot of things like your insurance, getting a mortgage, all of these things affect your credit score. And when you have a bad credit score, you're either going to get denied or you're going to pay a whole lot of money to get the things that you want. And why just give away that money when you can get your credit score restored and be able to save money? People always come up with the idea of, oh no, I don't like credit cards. I don't like to do this. I pay cash for everything. Well, cash is king. But understand, credit is power. It speaks volume. You can get things with credit and don't have a job, because when they see that you know how to use your credit appropriately, that you have shown and demonstrated that you have all the factors involved with credit, you get what you want. So please keep in mind, don't be afraid of credit cards. Credit cards, loans, all of these things create you as a viable human being out here in the world, and it shows that you know how to deal with things. So understand, credit is your best friend, but you have to learn how to use it. So understand that your credit is constantly monitored and that everything you do impacts it. And without a strong credit score, you could be denied simple things as trying to rent an apartment, trying to get cell phones, just getting your utilities turned on at your home or wherever you're living at. A low credit score, again, it will cost you several thousands of dollars over the course of your lifetime. So one of the things that I wanted to talk about was understanding the FICO score. People don't realize the FICO score, it is where the credit bureaus get your credit score from. Okay. Credit score FICO was originally called the Fair Isaac and Company, and it's a data analytics company focused on creating scoring services. It was founded by two gentlemen, William Fair and Earl Isaac, in 1956. The two somehow figured that there was a need to come up with a scoring algorithm so that they could put out a credit module to show people their credit worthiness. And they created this system and brought it out and then introduced it to the world. However, it flopped. They didn't have all the things in order, and it wasn't good for the industry or the lenders. So they had to revamp it, and it actually was launched again in 1989. So this isn't something that's fairly old, okay? And then they named it the FICO, FICO. Now, so that you understand that back in the day, years ago, when I remember talking to my grandmother and a few other people, you know, your credit worthiness came from word of mouth. It was a bank or a lending institution calling and verifying everything. Does this person have a job? How much money do they make? Do they come to work? So these things happen word of mouth. They didn't have any type of system to necessarily factor in whether or not you were going to be a risk or not a risk. So just think about it. If back then you were someone that wasn't favorable to another person, you may not have gotten a good recommendation and couldn't get credit. And especially with something to deal with back during the time when we had a lot of prejudices and things like that. So it was hard for people to get credit. But as time had gone on, the FICO credit score became very popular. It's used now. It's a 3-digit number ranging from 300 to 850, which measures a consumer's credit risk and a staple for the consumer lending in the United States. So you can't do anything without a credit score. And actually, a bad credit score is just, no credit is just as bad as no credit. I mean, having a bad credit score. So you have to build up your credit worthiness in order to get things. You can't purchase a home that you want without having credit and being able to have different types of credit. But I'm going to dig into that a little later. So I just want to let you know that knowing that you have your credit scores, the 3 bureaus that have your credit scores, they don't pull the scores and get that information themselves. They're getting it from several different entities, okay? So to just think that when you go into the dealership and you're going to buy a car and they run your credit, they're running your credit based on the type of loan that you're going to need, which is an installment loan. So when they run your credit, they're going to run your credit sometimes 10 to 15 times because they're trying to find what lender has the best rates for you and the best deals. So right there, you walk into a dealership and you have no idea what your credit score is. You're already on the dark side because you don't have anything to negotiate with. You can't go in there and say, hey, I know my credit score is 755 or my credit score is 780. You're walking in there and you got a credit score of 502, 530. You're going to get some extremely high interest rates. They're going to be charging you 18%, 20% interest, and they're going to ask you for a huge down payment. So you're walking into a dealership not having any idea what your credit looks like is definitely something you do not want to do. Get your credit scores. Go to your financial institutions and sit down and talk with someone and see, hey, I am looking to purchase a car. I like to know where I am in terms of my credit. Will I be able to get a loan through my bank? What is my credit scores? Talk to them and find out where you are before you go in there and find out you need a co-signer or you get denied altogether. You know, we're grown folks and we're too old to be walking into places and needing co-signers. We need to be able to have the strength of a strong credit score to get the things that we want. Now, I know a lot of people are using Credit Karma, which is definitely something that's free and available, but it does not give you your true credit score. The reason why it doesn't give you your true credit score is because Credit Karma does not use FICO credit monitoring and numbers. They use a totally different scoring system that was created by all three credit bureaus because the credit bureaus wanted to make money. And when they saw that FICO is making all this money off of your bad credit, they had to come up with a way so that they could become profitable off of your bad credit as well. So keep in mind, bad credit makes industries make money, but not you. So when the credit bureaus decided to create their own credit modules, which began in 2006, I believe it was, they had determined that they were going to take out some factors that FICO uses and factors that they're going to use. When you go on Credit Karma, you have a much prettier credit score than you do if you actually look at your FICO score, okay? And the thing about it is, why do you think Credit Karma is probably the same thing as a lender would look at? Why do you think they have a different credit report? Does anybody have any idea? Any takers? Well, let me just go ahead and move on. Because they use something that's called Vantage Score 4.0, this is what they use. Vantage Score 4.0 is what's used by TransUnion, Equifax, and by Experian. They use this credit module because it does make your credit look better, but only 10% of lenders are actually using it. So it's really not something that you're going to be able to walk into a place and try to get a loan and use your Vantage score, because there are just only a handful of lenders that use the Vantage score. And honestly, I can't even tell you what lenders they are. I've tried to find that out, but I have no information on what lenders are using the Vantage score. So if you truly want to get your credit score, you're going to need to get your scores through the actual credit bureaus themselves. And keep in mind that all three credit bureaus will probably have a different score for you. The thing about that is that anytime you have things that are being reported on your credit, they're not always reported to all three credit bureaus. You may go into collections for some medical bills, but maybe whoever is handling those medical bills is only dealing with TransUnion. So those collections may only show up on TransUnion. You may turn around and you've got a repossession, but maybe that repossession only shows up on Equifax and Experian. They don't all mirror each other, which is great. But again, it all depends on wherever you're going to get a loan, what credit bureau they're actually going to be using, so that you'll know what score you're going to be impacted by. So what I want you to understand is that knowing about your credit before you go do anything, it's important. You need to know these things. I will be one to admit that I didn't. Great. But again, it all depends on wherever you're going to get a loan. I'm not sure, we're getting some feedback.
Oh, okay. Yeah, you might have. Is it gone now?
Yeah. Okay, so I'll move on. So understand that anytime you're applying for some type of credit, there's so many different credit scores that are used. People think that there's only one credit score, and there's more than one. You have a credit score for your insurance. So when you're getting ready to do insurance for your mortgage, for your automobile, motorcycle, they're putting a soft hit on your credit to determine your credit worthiness. They're looking at your background, what type of work you do. They're looking at your education. They're putting all of these factors together to determine what your insurance credit score is going to be. So understand that when you call some insurance companies, they're asking you, where do you work? What do you do? How long have you been doing this? What's your education status? All of these are factors in creating your insurance score. And before I started working in auto and home, I didn't know that they did that. So I was very surprised to learn, like, oh, wow, me having an education, my score could be totally different for someone who's never had an education, because they look at them as being a higher risk as opposed to somebody that's educated. So I'm not saying that that's right, but that's what they do. And I know Geico is excellent for it. They're definitely going to ask you that. And Progressive, Aetna, and I think Travelers, all of them will definitely ask you those questions when you're calling to get information on getting a credit rate. So know that those are not questions to pry into your business per se, but this is how they're going to be putting together your rate for your insurance. Also, when you're getting an auto loan, as I mentioned, there's a different score for that. There is another score that is used to get a mortgage. There's a different score that is used to obtain credit cards. Pretty much every credit bureau has anywhere from 6 to 9 credit scores that they use to determine how you get credit. So we'll never get that information from them telling you this directly. This is why I'm here today to educate you on this thing, is because it's fact. Okay. So also, when it comes to getting your credit score, they're looking at many things. And let me explain those things to you. There are 5 credit score factors in creating your credit score. Okay. 35% of your credit is based on payment history. So let's just say this. Let's start off with a perfect credit score of 850. So if 35% of 850 is used for payment history, that means 297.5 points are part of that 850 credit score. So if you use the biggest element of your credit score and you mess that up by not making your payments on time, having a bad payment history, that means you need to be paying your bills, because this is a big factor when you don't pay your bills on time. You need to always pay at least the minimum. Okay? Understand that in most cases, if you're 30 days late, they don't always report it to the credit bureaus right at those 30 days. You almost have probably 60 days wiggle room with that payment if it's going to be late, but do your best to not even get yourself in that gray area, because the thing is this: if it's 30 days late, then the credit bureaus, the credit card company has to allow those 30 days to happen to see if you're going to be late, right? So once they get their first 30 days and they see you have made that payment, now they're going to have 30 days before they are going to actually report it. So technically, you can have almost 60 days to make a payment and it not be late. But understand that a late payment counts for 40% of your payment history. So one late payment can drop your credit score by 119 points. It will kill 2 or 3 of payments that you've made on time. Okay, so that is just a definitely thing that you don't want to do. Make sure that you're making your credit card payments on time, because payment history with your credit score is huge. Again, one late payment can take away 3 good payments. So please make sure, if you've got credit cards, you're making your payments on time. Put reminders in your telephone. Use your email as reminders if you don't have it set up for automatic payment. Keep it in mind that you need to make sure that you don't make these payments late. So now we're at your credit to debt utilization, which is 30% of your credit score. So with an 850 credit score, this is 255 points of that 850. Now, many people, especially if you've been in credit trouble before, want to shy away from credit cards, and this is a bad idea, as I said. And the reason why is because utilization operates your credit. The FICO algorithm says you need 3 to 4 credit cards reporting every month to show that you can make your payments on time and that you know how to handle credit. One credit card, that's nothing. Most people can take care of a payment for one credit card. 2 credit cards, and you're showing a little bit more. But 3 to 4 credit cards, you're showing you know how to maintain, you know how to budget and get your payments made on time and handle making sure that you don't use more than 30% of what your credit card balance is. So if you have a credit card and it has $1,000 credit limit, if you run it up to $900, you've already used 90%. So that's going to definitely bruise your credit score. You need to use 30%, which would be around $300 of that credit card balance in order to use your credit to debt utilization and to get the full points for it. So I'm not saying that you have to use these cards all the time, but you need to show that you're able to manage. So use the credit cards here and once in a while. You would go ahead on, pay that, put it away. And when you need something that's an emergency, you've got credit there. Sometimes I know it's hard. We all get in situations and things happen, and you're able to only use a credit card to get something done. But keep in mind how you need to use that card. Don't make it a card that you're just doing things that don't make sense, just shopping and buying clothes and doing frivolous things with it. Remember, credit is usually designed for you to make emergency situations complete. Okay? So if you use your credit cards here and there, pay the balances off, do that. But keep in mind that there's a thing that's called the no memory element. And people don't understand, like, say, for example, you max out your card and you say, well, next month, I'm just going to go ahead on and pay it off. Well, when you make that payment, the history payment does not record. They don't see that you had made this payment. They're looking at your past. They're not looking right what happened then. So when you pay that off, it doesn't show you any credit history. It doesn't give you anything in terms of saying that you paid the bill on time. And that, again, is what we call the no memory element. And lenders only look at the exact month that things are reported, not the previous months. So you can't get those points back if you lose them because you've messed around and you've maxed out a credit card and now you said, I'm going to jump up and pay the balance off. It's not even there for them to add towards your credit score. So you will lose points on that end. Okay. So now we're at 15% of your credit score, which is called the credit age. With the 850 score, that's 127.57 points that is being counted towards your score. Credit age is important, and let me tell you why. First of all, people don't understand when someone says, do not close a credit card account. Don't do it because you lose your credit age history. So if you've got a credit card that you've had since 1999, 2000, keep that credit card open. Don't close it. People say, well, I'm going to pay these cards off and close it. No, you don't want to do that because you're going to lose your credit age. They are looking at what is called AAOA, average age of account. Okay. So you need to keep those cards open. You don't have to use them. You don't have to do anything with them. And maybe you're not using them because there's no benefit of that card. Maybe there's no, like a lot of cards now have cash back if you use it. Maybe you don't get any points for anything to use the card. So if that ends up being the case, then talk to the credit card company and let them know that you want to do something as to what we call a credit swap out. You want to get a card that is going to give you more benefits. But the thing that's great about that is when you get a card that's going to give you more benefits, like say you get a MasterCard and it says the more money you spend on it, it can go towards travel. Well, if you've gotten that old card switched over, that age is going to move with that new card. So you don't lose the age, but you've got a card that's giving you better benefits. And they'll probably even increase the maximum on that card, which is even greater. So that gives you more room to have your 30% credit utilization. So maybe that credit card that you're not using had a $5,000 limit. So if you go to that lender and say, hey, I want to get a better card that's going to give me better benefits, what can you offer me? They're offering you that card and they may double that balance. I mean, that maximum balance, and that's going to give you so much more room with your credit to debt ratio. Not saying again that you have to use it, but you've expanded your debt to ratio. So now you're looking even better in terms of what you have for your credit ratio. Now, again, if it's a situation where, I don't want to use all of this credit, I don't want it, that's fine. Every now and then, go buy a pair of shoes and pay it off. Leave a little money on there. Just take the card, use it, and put it up. Be smart about it. Credit only scares people that don't know how to take advantage and use it properly. This is why people say, I don't want credit cards. If you know how to use your credit properly, you have no reason to be afraid of using credit at all. So let's be mindful of that. Okay? So again, that's just recap. We don't want to close out old cards. You need to keep it for credit age. If the credit card is just not giving you any benefits of any kind, contact that lender. Let them know that you want to swap that card out to something that's going to be more beneficial for you, and talk to them about that. And they're going to give you something better. And they'll probably, again, give you more credit maximum on that card. And that's a great thing. Next, 10% of your credit card with the 850 score is 85 points of credit mix. When they say credit mix, they mean things like installment loans, revolving credit. Installment loans are your mortgages, your car payments, your student loans. Revolving credit is something that you're going to use monthly, and that would be your credit cards. So again, the FICO algorithm is what needs all of these credit mixes. And I know you're probably saying, I don't want this. This is crazy. Why does a school loan need to be on my credit in order for me to get a good credit score? This is what they created. This is the mix that they want to see. And I'm not saying that if you don't have any student loans and a couple of other things that you won't have a good credit mix, but I'm giving you examples as to what they're looking for when they're looking at your credit. They want a 10% good credit mix because they want to know, can you be reliable with making payments on an installment loan? Have you gone out here and got credit cards? They're looking at what you're doing in terms of getting your credit. Now, the last piece is new credit. They want 10% of that, and that's 85 points of that 850 credit score. So in order to max out those, they're looking for things that involve, getting maybe a new credit card. Maybe you go and you apply for a store card, but I don't recommend those because there's usually a lot of high interest on those store cards. But they're looking for things like that. They want to see that in 2 years, you have not gone and just maxed yourself out with trying to get credit all over the place, because we start looking at you like you're a danger. So you need to be careful with that. Don't go everywhere looking and getting and applying for cards just because they need new credit. Again, you have to be a conscious, smart consumer when you're looking at what to do about your credit. Okay? So now we've touched on all the 5 factors of how they create and look at your FICO score. All right? Now, I am going to touch on what I told you Credit Karma shows you, which is your Vantage score. The Vantage score, again, it's a little prettier than a FICO score, but again, only about 10% of lenders are using the Vantage score. And again, I can't find any lenders to even suggest to you who is using a Vantage score. Now, their element of creating a credit score is 6 units, not 5, as I just told you with the FICO score. They take 40% of your payment history and use it as part of your credit score. Okay? The credit age and the credit mix is combined, and it's a 21% credit algorithm. They look at credit utilization at 20%. And remember, with the FICO score, it's 30%. Okay. They look at balances on your credit at 11%. Okay. Again, part of that is 30% of your debt to ratio when it comes to your FICO score. So they're using the same thing, but they've just broken them up in different places. Recent credit, where we discussed it being 10% for your FICO score, they only ask for 5%. And last, when it comes to available credit, remember how I was saying that with FICO, you need to use less than 30%? They're only looking at 3%. So this is what makes your credit score look so much prettier with Advantage score. But again, no one's really using it. So we need to make sure that you're using your main credit score, which is FICO. Okay? So don't get into worrying about what your Credit Karma score is. I mean, it's a way to get something to have an idea as to what your credit score is, but if you walk into some place to get a loan, I promise you that credit score that came off of Credit Karma, when they pull your FICO score, it's going to be about 30 points less. Now, let me just mention to you
I want to interject right here, Tanya, because I think this is a very important piece right here when you start talking about the Vantage score. So you're talking about all of these companies that are on TV with Credit Karma, Credit Sesame, and all these little apps that you can keep on your phone that will tell you what your credit score is from day to day. So they are the ones who are looking at this Vantage score.
Exactly.
And so I want to make sure that the people understand this is not the score that you need to be looking at, because the industry standard, so to speak, is the FICO.
Exactly. FICO is your true credit score. Vantage is not. Your true credit score is going to come from FICO.
Also explain to them how that Vantage score came about, and I'm going to dip back out again.
Right. Well, as I mentioned, the Vantage score came about is when the 3 credit bureaus saw how FICO was profiting off of people's bad credit. They did not want to lose getting any money. So they said, hey, hold it. If FICO is making all this money off of people's bad credit, we want to make some money off of bad credit as well. So we're going to design and create our own credit score algorithm. And that's how they came up with the Vantage score. So Vantage score, like I said, became, it hit the floor around 2006. And the thing about it is when it first started, you know, just like FICO, they have different series. It's a different class. Like right now, FICO is at 4 points. It's at FICO 8. That's, I think, or FICO 9 right now is what they're using. So that goes to show you there's been 9 variations of the FICO score that they're continuing to create, change, and this is what happens when they go and say, okay, well, we're no longer using FICO 7 anymore. We're now using FICO 8. We're no longer using FICO, whatever. They keep moving it up because they're changing the algorithm of how they're collecting and getting your credit information. So that changes. And right now with the Vantage score, they're on Vantage score 4.0. So the Vantage score 4.0 is because they have constantly changed each factor of their distribution of the credit. So every couple of 3 years, it increases and it changes. So they did skip a version. I'm not sure why, but that's what it is. So like I said, you can look at the Vantage score model and take a look at it, but it's really not something that's being used by lenders. So don't bet yourself on going someplace and taking that pretty Vantage score with you and expecting it to be a true credit score, because most lenders are not using it. So one of the things that I did want to go over is to talk about the killer 6 on your credit scores. Things like judgments, foreclosures, bankruptcy, tax liens, child support, and repossessions. All of these fall under your payment history, and these are the things that kill your credit score. I mean, understand sometimes these things can be helped. We all go through life changes and things happen. The company that I'm with, it's amazing that one of our top leaders, she had a $50,000 tax lien. Our company got that $50,000 tax lien off her credit. Okay. And these things can come off your credit. And the reason is because the Fair Credit Reporting Act that came out in 1972, which allowed anything that is on your credit that is incorrect, obsolete, not 100% accurate, to be removed off your credit. So if they spell your first name wrong, that means it has to come off your credit report because it has to be 100% accurate. And like I said, I'll use Deborah as an example. Deborah spells her name Debra. But if they spell her name another way, Deborah, which is also a common name for Deborah, they have that listed on her credit score and it's got a derogatory account. They have to take that off because that's not her name. It has to be 100% accurate. If it's not, it has to come off. And that's why the Fair Credit Reporting Act has to be aggressively used in order to get your credit and things deleted and removed. It's not impossible. It can happen, but you just need to make sure you know how to get it done. A lot of people don't understand that the Fair Credit Reporting Act, that's your best friend because that's going to help you get your credit fixed. You need to make sure that you look at that and make sure you know and recognize that's not me, that's not mine. Get those things off your credit because this is what's going to increase your score. And as I've already mentioned to you, the Fair Credit Reporting laws, you can look those up, but it's a huge book. There's a lot of information in the Fair Credit Reporting Act. So I just want people to understand that you can get your credit fixed, repaired, restored, whichever word you want to use, it can be done. It's not a killer situation because a bankruptcy hit. It's not a killer situation because a repo hit. It's going to be there unless you do something about it. So we have to get with people that know how to work and fight for you to get your credit restored properly so that these things do not come back. I mean, people have told me, well, I know how to fight my own credit. I'm going to do it myself. Certainly you can. I don't never tell anybody that they can't. But what you don't understand is when you don't aggressively use the Fair Credit Reporting Act, those items can show back up 2-3 years later.
Let me tell you, I'm going to jump in again. This is what happened to me, right? What you're talking about right now. I twice actually went through the process, and it's a tedious, long, drawn out, nail biting thing dealing with the credit reports and trying to interpret that Fair Credit Reporting Act and all of that stuff. You need a lawyer.
And this is why, I tell people that.
Yeah, so, but this is what happened. That's exactly what happened to me. And I was able to get, it took me about a year, but I was able to get some things off. But two things happened. I was never able to get everything off that was affecting my credit. And then that I did get off, like you said, came back. And I didn't back up. And then it came back with new, more current dates to where those accounts look like they were new all over again.
Right. So now you're starting that counting period of trying to get those down and get them off again. If you are doing it yourself. So I'm not telling people to not do it themselves, but it doesn't always work out to be a favorable thing, And then when people apply online to get their credit reviewed with the credit bureaus, you actually lose your fighting power. You don't have any way to sue them if they don't do anything correctly because you're signing waivers and you don't even know it when you're applying online for them to look at, dispute whatever that you're disputing. So you have to understand that is the worst thing to do, is to dispute anything on your credit score and do it by using their online system. That's the catch-22 for them to get you jammed up and you have no leverage. So please, people, don't do the online disputing. Do not use it. Now, what I would suggest is that every year every 12 months, you can get a free copy of your credit score from each of the credit bureaus. And before I go any further, and I keep calling them credit bureaus, I want to let people know or ask you a question. Does anyone out there think that the credit bureaus have any legal authority over you?
I'm trying to see if I see any responses. I don't think they're responding.
Okay, well, they do not. They have no legal authority over you whatsoever. They are for-profit companies and they do not have any legal authority over you at all. They're just called credit bureaus as an intimidation label, I would say. But more importantly now, we're more so referring to them as credit agencies. So understand that they're collecting information that they're gathering from other places that just may not always be true. So understand, just because that information is there, it does not have to remain there. That information can be deleted. As I said, it has to be 100% accurate. If it's obsolete, it has to come off. And if it doesn't belong to you, it does not stay on your credit. It has to be accurate. Okay? So anything erroneous, obsolete, incorrect, it has to come off. Okay? Deborah asked me just to touch a little bit on collections. So I'm just going to briefly tag some information on collections. And what I want people to understand is that if you get a call from a collections company and they're trying to get you to talk about a collections account, don't do it. They are trained to keep you on the phone for 60 seconds to get you to admit and confirm a debt. You do not give them any information. Tell them to send it to you in writing and hang up the phone. It is up to them to prove you owe that money. The thing is once that debt is sold to the credit collection companies or whoever they call themselves, you don't own that debt anymore. It's been bought from whoever they bought it from. If it's a Sears credit card, if it's from your doctor's office, they bought that debt for so much money to collect it and make their profit. You do not have any responsibility or anything to have to pay that collections off. Leave it alone. Get your credit, do your credit cleanup and get it off. I also want to let people know when it comes to medical bills, this can be a violation of your HIPAA rights because you did not give this collection company any permission to take or have any of your information. So again, they have no rights to collect that information. People get nervous and think, oh, I'm going to pay it off. Well, if you pay something with collections, you need to ask for a debt release letter for all the credit bureaus so that it is taken off your credit. If you just pay the bill, it's going to stay on your credit. It's not going to increase your credit score because it's already been reported. And understand that once you pay it, all it does is say pay as satisfied. It does not give you any more points. It's not going to increase your score because you paid that bill.
Yeah.
So understand that. Once it's hit collections, don't worry about it. Again, if you do find that you need to pay it, get the debt removal letter so you can have it for all credit agencies and have it completed so they'll take it off. As otherwise, it's just going to show paid as agreed. Now, I know I mentioned about being able to get the 3 credit scores for free. What you cannot get for free is your FICO score. So you can do a free estimate if you go to myfico.com, and there's a series of questions that they will ask you about your credit debt and what you have with your credit, and it'll give you a ballpark figure as to what your FICO score will be. Otherwise, for $29.99, you can get your FICO score. So if you don't find that you have the funds to get the actual report, go to myfico.com and do the estimated one and get an idea as to what your FICO score is going to look like so that you will have them all. That pretty much wraps it up for me, Deborah. I hope this information that I provided for you all today will help you, get you to understand your credit better, get you to understand that you need to work on getting your credit cleaned up, the importance of having good credit, and credit is power. That's all I can say is people look at you when you walk into a place and your credit score is high. You don't even have to have employment, and they will give you what you need because that credit score speaks volumes. It holds conversation. But when your credit score is 502, you get no love at all. They're getting ready to sock it to you, baby. They're going to sock it to you. So,
Yeah.
again, my name is Tanya Dunnigan. You can reach me at 404-528-9884. Text me, call me, let me help you get your credit score up. You can email me at restoringthecredit.com. Please let me get your credit worthiness together. I can help you get your score up. Again,
Okay.
thank you.
Listen, this was wonderful, and you know, I listen. It's about six of you guys in here. If you have any questions, please um, post them in here while I have her on the line. Reverend Cohill, Cheryl Cohill, she's a good friend of mine, one of my mentors actually.
Okay.
That yeah, when I was doing substance abuse counseling, she's in here. She said I got to listen to the replay. Really helping me.
Well, listen, tell her to feel free if she has any questions or anything like that to reach out to me. I don't mind giving a consultation. I want people to understand this and get their credit where it needs to be. It's important that your credit is you get your credit together so that you can go out here and get and have the things that you need. And even if you don't plan on doing anything, just have the credit worthiness. And I'll give you an example.
Yeah.
I had to change my utility company a few weeks ago, and the girl was acting like she was intimidating me. Well, we use Equifax, which is usually the strongest of the three credit bureaus, and your credit score has to be over 700, and otherwise there's a deposit needed. I said, okay, run it. I said, run it because you won't get a deposit from me. So she
Yeah.
ran it. Oh, well, you're all set. I thought so. Bye, Felicia. You don't need a deposit from me because I know what's going on with my credit. And yes, baby, I'm over 700, so go ahead on, run it. I'm not worried
Right.
about that. So
Yeah.
it's been times when my credit wasn't where it needed to be. I was divorced and got stuck with some things from my divorce that I was trying to manage and I couldn't. I had to file bankruptcy. But after I did that, I learned and taught myself how to reinvent my credit and stand strong with it. And I mean, that's all we can do. Sometimes things happen that we can't control.
That's one of the important things about, and I want to interject here. That's one of the important things about what you do is that, um, listen, folks, she is able to keep you out of bankruptcy. Um, what we think is bad, bad, bad may not necessarily be. That's why
Exactly.
it's always good to have an expert on hand, and that can help you and explain to you and show you how to maneuver, because they know the laws. They know what can be done and what can't. You talked about one time before about how you can even, in terms of rebuilding credit, that you can even help folks rebuild their credit with rent payments.
Absolutely. I have a program.
Yeah, that's a major piece because a lot of our audience, well, it's two different folks in here. It's the human service professionals that are here, and and then the other piece is folks with low income households, and most of them are not homeowners, and so it's important that they know. Listen, we know how to do this thing to where we can even use your rental payments to help rebuild your credit history if your score is low. So
Absolutely. Your
yeah,
credit, I'm sorry, your rent is usually the largest expense that you have. So why not use it to help build up your credit?
absolutely.
You know,
But
there,
that goes back to knowing, you know, knowing how to do it. If you're trying to straighten your credit out yourself, you won't know how to make that happen. So
exactly.
I don't see any questions in here, but I am going to ask a couple things. You already talked about the credit mix, so I'll leave that out. Um, how Tell the people how many, in terms of total number, how many credit scores are there really? Because most of us thought that it was just three: Experian, Equifax, and TransUnion. Now you talk about the Vantage score, but it's really more than that.
Well, what it is that each credit bureau breaks down your credit score. Credit agency, let me use the right term here. Okay. So each credit agency is using your credit score for more than just one number. As I mentioned, your credit score with the credit agency is one derived based on what you need. Is it for insurance? So your insurance for your auto, motorcycles, marine, homeowners, all of that and is derived based on your insurance credit score. An installment loan, car, that has a different algorithm on how they create and get that information. Your mortgage is a totally different credit score than your regular score because
Yeah.
they're looking at, again, being and becoming a homeowner.
Right?
Right. So you
Yeah.
have more than just you have three credit scores from the three credit agencies, but depending on what type of lending that you need or what type of borrowing that you are applying for, this is how they
Yeah.
determine what score and how the algorithm affects that score. So, say for example, your insurance score, it may be at about 400. Well, for your insurance, that's a good score because I think the highest is 600. I can't remember exactly because I haven't really pulled that one in a minute, but that is based off of again, they're pulling that credit score. They're going to use your background. They're looking at whether or not you've had a bunch of tickets, speeding tickets. Because that's the first in action. When's the last time you had a speeding ticket? When's the last time you had a car accident? They want to know your risk. The things that involve risk are car insurances with accidents, your tickets, your if you didn't even have insurance for the last 2 to 3 years, that right there will shoot your credit score up. People don't realize if you haven't had car insurance and you say, "Well, I didn't have a car for the last 3 years," they penalize you for that. They penalize you for that. So I had a friend of mine that she was keeping no fault. Michigan has no fault. She was keeping no fault insurance just so she got herself to get another car. It wouldn't affect her credit, her insurance score, because she had
Wow.
already been through that before. She said, "Well, I know I'm gonna be another year before I get a car, but I just keep no fault basic on me so that when I get ready to get back in there, they can pull it." Because all of those factors go into your insurance, and as you know, Michigan is one of the highest insurances
I
you
think
can
we're
get.
the highest. I think
I
we're the highest.
mean, let me tell you something. When I moved from Michigan in 2010 and moved here to Atlanta, I had a 2008 Nissan Altima. My insurance, even with a good credit score, I still had good credit, was $150 a month, full coverage. Okay, and I had a $500 deductible. When I moved here to Atlanta and changed all that, my insurance dropped down to $98 a month. My deductible dropped to $250. Plus, I was able to add what they call a injury rider, which meant that if I got injured in the insurance, got injured in an accident or something happened to me, I got $500 right off the rip.
Right.
Okay, so here it is. I had not. No, I'm sorry. My insurance went down to $76. That's what it went down to. And I was floored. So when I moved here, my insurance company actually had to send me a check because they owed me money. I was like, what? Because I had paid 6 months in advance. So once I changed everything,
That's just out
they
of control. Mayor Mike Duggan is in court right now with the state. Only thing about it is it's kind of catch-22 because he's really trying to get rid of no fault period in the whole state, um, and or get a cap because in his view, insurance is so high here because of the PIP benefits, the personal injury protection
right,
benefits. And you got medical providers that are marking up prices 300% for auto accident clients and things like that. So I mean, they're charging like $3,000-4,000 for an MRI on an auto client. If you go to the hospital uh, as a result of a collision,
you're going to be stuck up.
the prices change in
Yeah,
terms of
they do. And let me
auto.
tell you something. The thing about Michigan's insurance, what I found out when I changed my insurance here in Georgia, was that Michigan's list of everything that you had to have with that policy, that's what made it so much more expensive. I mean, half the stuff, and I asked her, I said, well, why is my insurance in Georgia so much cheaper than Michigan? She said, because Michigan has so many factors involved with the policy, where Georgia
That,
doesn't ask for all of that. She
yeah,
says, Michigan is one of the highest insurance companies, highest rates that you're going to get. So
right.
it didn't matter a lot of times what you're getting. Now, a lot of people shop around and say, hey, I've been with this insurance company for 10 years and I decided I'm going to go look around, and you're going to get a better rate usually to be switching over to another insurance company. And that's fine. But the thing about that is that they'll will you in and knock down $200 or $300 off your premium. But when they get ready to start redoing your premiums for the next 6 months, they're steadily going to start creeping back up. So sometimes moving and going to a new insurance company may not be a good idea. And the reason is that if you have an insurance company that offers some good value with your plan, you might want to stay there. Because, like my insurance, I've been with them now for probably 15 years, and I'm what they call a Jubilee member. I'm pretty much at the top. I got,
Okay.
I'm like 17 years, I think, with Progressive. And once I get to that top, I have accident forgiveness. So if I go out here and have an accident now, it's not going to be counted against me. I have
Oh,
speeding ticket forgiveness. So if I go out here and get a speeding ticket, I get forgiveness for that ticket. So of course, I still can't go out here and be reckless,
no.
but it's not going to be added into my insurance premium when they get ready to do redo my premiums for my policy. Those things are not added in there. So that
Yeah.
was important to me. So that was one of the reasons when I called around and I started getting rates for Allstate, State Farm. Surely they were bringing me down by $125. I was going to get my monthly premium brought down by like maybe $38 to $48, which is a beautiful thing. But if I go out here in 6 months and I have a car accident, they're going to equate that into my score, and my score, but into my policy. And now I'm probably going to be paying as much as I may have been paying at my previous insurance payer, and I have no benefit. I don't have accident forgiveness. I don't have ticket forgiveness. I don't have my towing and auto and stuff like that added into it. I have towing with
Yeah,
Progressive.
it creeps back up. It does creep back
Yeah,
up. I was going to say it's the redlining too. Here.
yes,
That's
it does.
that's
So sometimes to move isn't always the best thing to do. But what you can do sometimes is negotiate with your insurance payer. Say, hey, I haven't had any accidents. I haven't had any speeding tickets. What can you give me? What kind of additional breaks can I get? So,
yeah.
all kinds of things goes into that. Do you have a garage? You've had no speeding tickets.
That's right.
I did one thing that I was a little nervous about.
Yeah, but they are asking a lot of things now when you're getting those insurance quotes, even your level of education.
Yes, I said that. They're
So,
looking at that because those are risk factors as opposed to someone that did not graduate from high school, someone that, and they even ask you, did you take driver's training? They find you more of a risk if you did not take driver's training. How long ago did you take driver's training?
and then here, to based on what we're talking about today, they definitely are going to ask you your credit. They're definitely going to pull your credit
Yes,
when you're getting auto insurance. Now, I don't know if they do that in all states, but they
yes.
definitely.
Almost every insurance company is running your insurance, your social security number and getting your
Sure.
credit score because this again is giving them what your risks are. Okay. So if you got a bad credit score, then they're looking at, well, this person probably is going to go out here and have accident, and then we got to pay all this money out on policies and claims. They're high risk. Okay, they'll turn around and cancel their insurance, and we've covered the car, and you got money that's going to be owed to us because they didn't pay their premium, and we protected their car for that 2 months that they didn't get a premium payment. So they're looking at all of those factors, and they are using them, and some are
Yeah.
using them. And like I said, when you start asking those things, when I started,
That's the point of why we're having this discussion today, because credit, like you said, we have to learn how to use credit responsibly, but some people don't want the burden of having credit, and at a certain stage in life, you do get to the point to where you're trying to simplify things. You're not trying to have a bunch of bills and all of that stuff, but
absolutely,
it's important that you keep things going because there's just other factors why you need to have the credit, even if you don't. Why you need to keep your credit active and open, even if you don't need it. If you
right.
don't, that's even better. But like you said, buy a pair of socks and whatever. Just to keep it.
Exactly.
But
And I'll mention this. Let me mention this. One of my business partners was telling me that one of his clients told him that in the state of Texas, she went to go rent a car, and they ran her credit for the car rental. And I'm like, oh wow,
for what
yes,
now?
for a car rental in the state of Texas, they're running your credit for car rentals.
Wow. Yeah.
Yes,
Everything
indeed.
now. You got jobs. You apply for a job, they run your credit now.
Yes, exactly, exactly.
It's
So
not
credit,
wait, yeah.
right? Credit is huge and it's important, and it ends up hurting us that are less educated, the black and browns. So we can get our credit up. Stop being afraid of it. Get an expert like myself to help you get your credit up and make yourself in those 750s and up so that you can walk into wherever you are and they look at your credit score and they're going to be treating you like you the queen or the king of the land. Oh, well, hold on. What do you want, Mr. Jones? Your credit score is 775. Oh, you are the ill nana.
Yeah.
So these things are important. So
Yeah.
don't sleep on walking around with a bad credit score because it is not helping you. Credit does not fix itself.
No.
It does not fix itself. You have to take the time to get it fixed.
Here's another question that I want to ask. Where is it? Oh, you were talking about something, and I wanted to ask you this. As it relates to making timely payments, when you're making your payments on time and stuff like that, is it true that you have to know the reporting date for your creditors as opposed to your billing dates?
No. Your reporting date does not factor in as long as you're paying the bill on time. Remember how I said,
if you're billing from, I was listening to another guy and he was saying you could be paying your bill on time according to your billing date, but you need to find out what date that the creditor actually reports to the credit
That again usually is 60 days from the date that it's due. And I'm not sure where he would get some information like that from, because to be perfectly honest, that's fraud. You can't tell me that my bill is due on the 10th and I pay you on the 10th, and you tell me, oh, well, our reporting date is the 8th. But you did not provide that information for me. So again, that's fraud.
Okay. Okay.
Yeah, no.
Listen, I'm trying to slow you down while I got you here.
Go ahead, sis. I'm here. You know, you can't do that. They have to provide you with the information that they are policy with. So if their policy is your date is due, your payment is due on this date, then your payment needs to be due on this date. But what I will say is you need to be mindful of is if that date means, is it Eastern Standard Time? Is it Central Standard Time? Is it Pacific Standard Time? Because say, for example, you are Pacific Standard Time, you're in California, but you pay your credit card bill because the company is based in Michigan, which is Eastern Standard Time. So they may have a cutoff and say it has to be paid by 8 p.m. or 9 p.m. Eastern Standard Time. Well, you need to make sure you've made that bill by that time.
Yeah.
Because if you made it at 8 p.m. Pacific Standard Time and it's due at 9 p.m., that's midnight your time, and that bill is late.
Yeah.
So these are the factors that you need to be sure about. Yeah. Understand that, because most of my credit card companies, they are in the they're in the Midwest. So I have either Central Standard Time or I have Pacific Standard Time. But you know, I always try to make sure that I pay my bill a couple days before it's due anyway, because it's easy to forget if you get distracted or busy. And being the type of business that I'm in, I'm constantly moving, I'm constantly on the phone, I'm constantly this. So I make sure that I put it on my calendar in my phone, because I do everything with my phone. So when it pops up, I try to right then go and get that paid so I don't forget, because I don't want my payments to be late. But if I have made a late payment, I will call that agency. Hey, hold on. Hey, by the way, I just forgot my bill was due yesterday. I paid it late. Can you remove my late fee? Yeah. And they'll go, well, you know what? You've always been on time. Yes, we will remove your late fee. So negotiations can happen, but you can't be consistent with it. I can't be every 4-5 months. Hey, can you take that late payment off? No, I just happened to one time when my mom was ill. I thought I paid the bill and I forgot, and they sent me the friendly reminder. And I was like, oh my God. So I called them. I made the bill, satisfied, and made the payment right away. But I called them and explained to them. I said, listen, unfortunately, I had a life event, and I just got behind. I've made my payment. Is there any way you can take off the late payment? They said, yes. It won't show up on this statement that's going to come out, but we will remove it. So when you have good habits, and they know you are a good customer with good habits, they will work with you.
That's something to work with, negotiate with.
Yeah, they will work with you. It's not all shot to the side where it's like, oh, no. But if you every other month, you late, then that payment is going to stay.
Yeah, they're trying to keep you as a customer too. So, you know what I mean? As much as you want to keep the credit, they want you to keep them, they want you as a customer. So,
exactly.
Yeah, so
exactly. Retention is important, because their retention is important. So that's why I was saying, not closing out those old credit cards because you said, oh, I don't even use that card anymore. It's part of your credit aid. Just call and ask them to give you a different type of card, something that's going to give you more benefits. Everything can be negotiated as long as you remain and are a good standing customer. They'll work with you. But if you just all over the place and all willy-nilly with doing things, they have no reason to want to work with you, and they won't. So just keep in mind, it's important to pay on time, but if you have a situation where it does require, or it has happened that you forgot, you were late, if it's something you've done once or twice a year, they'll usually work with you. But on the most part, you have to remember to pay things on time. And if you are not good, remember, oh, today's the 10th, my bill's due. Put it someplace so that it can be a reminder for you on your calendar and your email, so it'll pop up on your emails, on your phone. I mean, pretty much everybody in the world is walking around with a cell phone. Or
Yes.
either if you don't want to do that, then set up automatic payments. So it's going to come out automatically from your bank account, and you can
Yes.
do that. So you have to understand that there's ways to continue to pay on time, but you got to do it. You got to do it. There's no ifs, ands, and buts about it. We cannot have excellent credit and we out here paying our bills whenever we feel like it. It don't give you excellent credit.
That's right. Well,
Okay.
listen, folks, I've got Tanya's information up on the screen, all of her contact information. I also posted it on the Community Advocate Network of Michigan's page. Um, listen, give her a call, email her, and of course, we can only cover so much in these broadcasts, but she can definitely help you get your business in order and get some things straightened out. As you know, the Community Advocate Network, we advocate for low income households and socioeconomic functioning of low income people, communities, organizations, whatever. However, we also advocate for self sufficiency. That means that, I am a strong believer in God bless the child that's got his own.
Right.
We want to use, certainly if you need help, get the help. I am a strong proponent for that, certainly. But we need to be able to use these programs, services, resources that assist us in the time of need as stepping stones and not stumbling blocks. We're not trying to get caught in the poverty trap. We're trying to survive until we can do better and then go on and prosper. So this is an important segment, and I'm so glad that we may have to do this again.
No problem. You know, I'm here for you, sis. We can do this. I love sharing this information. I love helping people. I want people that want to become homeowners. Let's get you there. My goal is to try to get 100 people to obtain mortgages. There are a lot of programs that are available to help people with down payments, to help them to get their credit up so that they can be approved for mortgages. So let's get it. Let's really take the time.
I have some programs, and I need to get some more information on the site, but I have some program information or information on some programs here in Michigan that will assist low-income households for getting into home ownership. In fact, there was a seminar today with the State Housing Authority over there at the Northwest Campus at WC3. But I post it all the time. But you still have to have your credit in order, even if they with the money, the down payment, they're still going to run your credit. They may lower the standards in terms of how high of a score you will be required to have. They may only require you to be in the 600s, but the 600s is high if you got repos and all kinds of collection debts and all of that stuff, old revolving credit cards and all of that stuff. So you still, even with the assistance programs, it's still important to have your credit in order because some of those programs will require your credit history to approve you even for the assistance. So
and the other part to that is even though they're giving you this free money for down payment, and they may not be using your credit score as a factor in one of those programs that does not use your credit score.
That they have a more relaxed standards in terms of what you may not have to have a 700 credit score, but you may have to have like a 620, 640.
Yeah, most of them are at least looking for the 620. But the thing about it is, you still can't have your credit cards at a 90% or 70% mix. They're going to ask you to pay those down. They're going to say those need to be paid off. And especially if you're doing FHA and you're going conventional, they're going to say those are going to need to be paid down. So you owe $10,000 in credit card debt, but you may be able to get a $20,000 down payment assistance. But if your credit is not showing good standing, collections, they're going to say you're going to have to pay that off and get it removed.
Yeah.
And why, I don't know why, I don't know. And I really wish I could find out from a mortgage lender why they're making them pay those collections. Because again, if you don't get it to where you get that debt payoff letter, it's not increasing your score. It's still going to sit there and just be paid as agreed. But the one of the ones that give good and help for purchasing a home, and you don't need to have a credit score. They don't use your credit score. Is oh my God, it's on the tip of my tongue. Remember, I told you about it, Deborah, that it came to Michigan.
NACA?
Yes, NACA. NACA is one of those where they will help you get into a home with no money down. They'll pay your closing costs and put your down payment down there. But they're going to run your credit and look at and see what's going on. So if you have a collections bill, I think it's under 2 years, they're going to require that you pay it. But if you get with us, even before you do that, to make sure that your credit and everything is cool, you don't have to pay that bill.
Yeah.
You're going to look at the fact that, hey, it needs to get wrote off because it's collections. I didn't agree to it. That's the thing. When it goes to collections, you did not agree for them to take that bill. It don't belong to you anymore. It's not yours. Right. But whatever the reason is, they looking at that to take it. And the reason is that they don't want the house to become in any type of an endangered situation where you owe something and it could become taken. Like if you have tax problems, they want to say, if you owe taxes, something like the government can come and take your home. They can put a lien on your home and take it. So they're going to check and make sure that you don't owe anything with your taxes. They're looking at all of these things. Like I said, buying a home is important. So before you go running up to somebody, I want to buy a house, I got down payment assistance, you still need to have your other business cleaned up. It's not just going and saying, hey, I'm getting NACA, they're giving me $10,000 to go towards purchasing of a home. You still have to be together because they want to make sure that your credit worthiness is worthy.
Absolutely.
Exactly.
I'm not going to hold you guys. We've been in here about an hour and a half. I do not see, I want to make sure that we do not have any more questions in here. Thank you, Cheryl Cohill, Reverend. That's the Reverend. I love Ms. Cohill. And who else we got in here? Lori Clark Horton. I'm sorry. She has a daycare, takes care of, I don't know how, she got the 300 children over there on 6 Mile of Wyoming. LA
wow.
Child Care Academy is in the house. Who else do we have? Renee Bernard. I don't know Renee, but thank you for coming. I hope that you got information that that you can use. And I got a couple more folks in here. I can't see their names. So thank you so much. And when we schedule again, guys, I'll definitely let you know. I also posted Tanya's contact information on the Community Advocate Network page. Send your clients, send your whomever, anybody that needs it.
Yeah, it may not be you that needs the help, but it may be a family member or a friend. Let us get them to excellent credit.
Yes, let's get them there. Okay, Reverend Cohill says she knows Renee. Hello, Renee. A friend of Reverend Cohill is a friend of mine. So, welcome. Okay. And
awesome.
So I appreciate you guys so much, and thank you so much, Tanya. I love you, sis.
Love you too. It was my pleasure.
Listen, you already know how we do it. We've been rolling a long time.
Exactly. All right. Well, anyway, guys, thank you for taking your dinner time and spending it with me. It is greatly appreciated. Enjoy the rest of your evening, and I will be giving her some more information to post on the blog to help individuals out with credit information. Again, feel free to call me, text me, email me. I'll be glad to answer your questions and see what I can do to assist you, okay? Good night, all.
Good night, everybody.